Tara, I mean, if you look at the demand story in the crude oil world at the moment, it's beginning to fizzle, it's getting weaker, and those tapering plans for January for OPEC Plus are becoming increasingly out of reach.
Yes, good morning, Yousef. So I think oil has a few headwinds. One, of course, is the fact that this pandemic has persisted for much longer than had been anticipated back in March or April. We're now looking at a resurgent wave across much of the world, and that clearly has implications for demand. Now, supply has been relatively constrained by the agreements that OPEC Plus have worked so hard to maintain. But the problem is that it's becoming increasingly difficult for member states to keep to those quotas as they become under intensifying fiscal pressures to boost their revenues. Most OPEC Plus members depend very highly on oil revenues, and that is an issue.
In your research, you highlight the possibility of oil prices sort of staying lower for longer and ultimately the ripple effect that would have across the GCC. But you also acknowledge that in many ways the Gulf has not lived up to the necessity for reform and to diversify away from crude oil. I mean, how vulnerable are some of these countries this minute?
Well, very vulnerable, Yousef. I think if you look at the forecast by S&P Global Ratings, the GCC is going to require nearly $500 billion in deficit financing over the next 3 years. And that's clearly, a massive hit to the balance sheet. If without oil, it's very difficult to see how they generate revenue. The litmus test for diversification is, can you meet your bills without oil being at $100 or $120? And the reality is no GCC country meets that test.